is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Always do your best. Practice makes the master. By doing your best over and over, you can master the art of transformation. By doing your best, the habits of misusing your word, taking things personally, and making assumptions will become weaker and less frequent with time. Market-wise, let's take a look at it out here. We have the Dow Industrials down 205, NASDAQ off 100, S&P's down 30, gold contract up $9.90, trading at $12.92 an ounce. Silver up 9 cents, $17.03 an ounce. Platinum down $3.50 at $9.75 a pound. Light sweet crude up 31 cents, $47.09 a barrel. Notes, 10-year note up 7 ticks, 126.24. 30-year bond up 22 ticks, 155.24. King dollar up 77 ticks, trading at 93.510. The euro is at 117.5 to the U.S. dollar. The yen is out here at 109.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so check it out, folks. Bottom line, we start with the SPY. What you're going to see is that the SPY down on volume. Already did the counter trend bounce. You get 82 million shares traded. You're coming into the low from last Thursday. So last Thursday, we did 120 million shares. You go up, and we went up with 56 million. Well, here, let's just do the whole thing. So down Thursday on 120 million. Monday, we go up on 73 million. Tuesday, you do 55. Yesterday, you do 56. Back down on 82. So what do you have here? Well, you're at 244.02. A close under 245.01 basically sets up that you're going to go to the lower end of that range. The lower end of that range is 239.95. Okay? Dow Industrials. We take a look at the Dow. Now, what had happened is, of course, is that the NASDAQ had already broken. The S&P broke. The Dow Industrials hadn't broke. It broke today, folks. And what the break is, I'll go through this with you. The break specifically is that, the Dow took off from 21,960, goes all the way up to 21,179, and just the first time it came back to 21,843. No big deal, right? Well, what you had out here today, now we've broken that. Now you have a chart that's basically broken, and that's saying, okay, you do have a downtrend that's in place. Bottom line, we'll see how much further it can go. Let's go over to the S&Ps for a second, because what you're going to see is these closes always get intriguing when we've been down, fast, furious, and all of the above, okay? And in particular, and this is what's unusual, not unusual, but I want to show you something here. So when you're coming into a close on a bad day, folks, sorry about that, what happens is that you can sell off or you're going to bounce a little. I suspect what we're going to have here, more than likely, is the low just has to be tested one more time, which is 24.3650, and you're going to get a bounce. The reason being is that the fast sell-off in the last 10 minutes was too early in the aspect of where we are in the market right now. It's only 10 past 3. So most of the time what you have, if it's going to be a huge sell-off, another 10 S&P points down, what you would get is that you'd get a sideways move of building cause in order to get a flush out at the bottom. And we get just the opposite now. So we'll see where this shakes out. It's going to always be, it's always intriguing. I like to watch how these shake out. That's the first part of it. The second part of it gets a little bit more intriguing. Now, I don't expect we're going to get a bounce up to the 24.50, but I want to show you something. That on the whole way down today, every dip was getting killed. Man, that just keeps going in. And I'm not saying to buy this at all. I'm setting up how I think this close is coming in. So every dip, sold. So but the last time we had any real big volume on the way down happened to be at 10:20 this morning. 10:20 this morning. So that number is 2449.75. That's important to wrap your head around. Now let's go over to the NASDAQ Composite and look at that, because if the NASDAQ Composite is looking the same, which I believe it is, it is. So what you're going to see is on the Composite, and this is the correlation about how much energy is being used, when it's being used, is important going up or going down. So what you're going to see there also is that these last bars down in the Composite, got you at lower price. You don't have the juice behind it because the market's tired from using that much energy. So the bounce here, and I don't expect it to go to 58.53, but I do expect a bounce because of the amount of force. That also was at 10 o'clock this morning. So it's going to be pretty cool watching this whole thing shake out. Now, that being said, this trend is down. 877-927-6648. Let's go and take a look at the gold contract. What we have with the gold contract is this. Gold contract today does 305,000 contracts. That's big contract volume. We needed big contract volume as we're coming into the highs once again, because what the gold contract has been trying to do for quite some time is take out the highs from 1307, which is the high of April 17th, as well as June 6th. Now, the cool thing here is that we are doing this on a Thursday coming into a Friday. That is a good scene, folks. The reason it's a good scene is that Fridays are always tough in the marketplace. Bottom line, gold can take off topside or get crushed. The way this is trading right now, gold wants to take off and wants to finish that ABC structure on the way up. And that ABC structure on the way up has a price projection of 1327. We go take a look at the bond market. The bond market is confirming that the bottom line is that money is going into bonds, fast, furious, all of the above. Right now, you have the 10-year trading at a price point of 126.24. The highs, folks, that's going after are 127.08. That was from the June 14th high. I suspect that's going to be whacked tomorrow also. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 204. NASDAQ off 102. S&P's off 30. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 209. You get the Nasdaq off 105. S&Ps are off 31. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. Andy's got a great show right here, folks. 5 to 6 Eastern Standard Time every Tuesday and Thursday. You can get the show right on your cell phone. You go to TFNN.com. You just hit Tiger TV. You're going to get some great HD quality video. And, of course, Andy's got 2 newsletters, great newsletters. He has the Technomental Commodity Report and the Daily Essentials. You can come over to our website right now, test drive them. The way you do that, go to TFNN, go to newsletters. You can test drive one or test drive both of them. Andy Heck, what's going on?
Hey, Tom, how are you?
What are you selling this market, Andy?
Selling what? The stocks?
Yeah.
No, I'm buying the precious. You know what? I got a wild days in these markets. Huh?
There's no doubt. We got some action, man.
We got action. And you know what? It's the second half of August, and this is a time where most market participants are on vacation in the U.S. and Europe is virtually closed at this time of the year.
Right.
But the markets are taking no vacation this year. I'll tell you that much.
No doubt.
And what I have up here to take a quick look at is the quarterly chart for palladium, which has broken out to the upside, and it surpassed the 2014 highs yesterday. We're trading at $925.75 an ounce here. And, Tom, the 914 level was the only technical level that separated it from the all-time high at 1090.
So what the heck's going on? So is this the thing that is just basically, taking the platinum market apart?
Well, I think that's part of it, but I think there's a lot of industrial buying. I think China is buying a tremendous amount of industrial raw materials, but I think it's a harbinger for rallies in the rest of the precious. I think the rest of the precious are going to follow. Gold, we're within $15-16 of a breakout to the upside. Silver, further, but you know as well as I do, silver, you could blink your eyes and it could be up again, up $1, $2, $3 an ounce.
Right.
Platinum gets above 1,000. That could do a runner, and the highs for the year are 1,050, and that can be as thin as silver at times. So I think things are looking pretty good. And while the dollar could bounce, first of all, every time the dollar bounces, Tom, it seems to get smacked in the head. And it's not so much that it just seems another event happens that sells the dollar off. Like yesterday with all the CEOs leaving the councils and forums, that smacked the dollar down. If Gary Cohn would have walk away from the administration, I think the dollar would go down. But more than the dollar weighing, affecting the precious metals here, it's the bonds. And that Fed statement yesterday was very dovish.
Yeah, that was
the
soft.
bonds,
right.
The bonds are back up near 156. And, it seems like to me that precious metals have been more susceptible to moves in the bond market than they have been to the dollar. And right now,
that would make sense. I mean, because the reality, folks, is in a low interest rate environment. The argument is, we haven't had heard people say this in a long period of time, but the argument is that gold doesn't pay interest.
Right.
But big deal.
Exactly.
You can put 100,000 in the bank and good big deal. You're gonna, in a year you're gonna lucky if you make 1,000 on it. So. Right.
And by the way, gold, the bonds don't pay interest either.
Well, it depends which one you have, I guess.
Yes, but not.
Yeah, no, that's right. No, the 10 year, the 10 years paying 2.2, right? Yeah. So.
Those are. What was the rate on the first mortgage you ever took?
14.
Right. Okay. Mine was 12.
Right.
So these interest rates are low. They're crazy low.
No,
and when they tick higher, these precious metals feel support, and they feel support from a dovish Fed, no question about it. So I do think we're going to break out to the upside. I don't know if it's going to happen this week, next week, the week after, but they keep coming back. We sold them down earlier this week. They came right back. Silver looked lousy at 1656.
They just don't stop. I know, man. I know. It's amazing, isn't it?
They keep coming back. They keep coming back.
Well, I can understand it though. I mean, technically they want to go, but when you look at the world thing, it's like, okay, why wouldn't they come back when France is only at 0.7%, Germany's at 0.4? It's like, okay, so because we're in a worldwide deal here. Do you know what I mean?
Right. Right. And the other sign that we're seeing out there, Tom, is these digital currencies, which have gone ballistic. I mean, Bitcoin is quadruple the price it was on December 30th.
That made another new high today, folks. Bitcoin traded to 44.77 today.
Wild. These are wild. And this Ethereum, this other digital currency, 37 times higher than it was on December 30th.
Yeah.
And these are reasons. These are bubble markets. There's no question in my mind. I mean, some people might.
We'll find out if they're not a bubble, man. When you can go up 400-fold, folks, it's pretty amazing. But we'll see. We'll find out.
Well, if they're not a bubble, then gold and silver are very cheap here, in my opinion.
There's no doubt, man. There's no doubt. Yeah.
So I'm very, very friendly to that market. I also like oil here, Tom.
Okay.
The Brent premium today went to $3.79 over WTI. To me, that is a sign of Chinese buying. Another sign of Chinese buying is what's going on in the Baltic Dry Index, which is back above 1,200 from 820 just a month and a week ago. That's got to support oil. We have inventory drawdowns. We have crack spreads up closer to the highs than the lows. We have the Brent premium moving higher. These are all positive, I think, for crude oil. So I think we're a lot closer to lows than highs in crude oil.
Yeah, no, I like how this came into it. I mean, you had your strength on the 25th of July. $46.38. You did 886,000 contracts. Well, we hit 46 today, rejected price, and you only had 575,000 contracts. So that's not a bad setup,
Right, and I could see crude oil doing a $2-3 update, just out of the blue.
Yeah.
Back at 50, and then looking at the highs for the year are only 55. I still think that $50 is a sweet spot for crude, but. Right now, I think we could take a run at the highs over there in the oil market. The other one that I really like here is the natural gas. EIA came out with a whole series of revisions today and all kinds of things, but the bottom line is that stocks were up 53 BCF. There's no way, in my opinion, we're going to get to 4 trillion cubic feet this year, and we're going to really struggle to get up to the level we were at in the winter, in the injection season of 2013, which led to $6.50 natural gas. I think natural gas is going over $4 this winter, maybe even over $5. So here at below $3, there are some bargains out there.
Yeah, no, I can see that. You had that rejection out here today. So let's see. Oh yeah, so 313 is the swing high from the 20th of July. 314 is the high from June 29th. Yeah.
Yeah, I mean, 311.40 is kind of the number I'm looking at on the upside in that gas. The other thing that's really interesting, copper. Copper, man, next up $3. We got up to 298 and a quarter today.
Copper, for both of us and for all you commodity bulls out there, folks, is a huge deal. There's no doubt, man.
It's a huge deal.
Yeah, I liked
really,
how that moved.
Really, technical resistance in copper isn't at $3. It's up at 327.
Yeah. Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. You have the Dow Industrials down 222. Nasdaq's up 107. S&Ps are down 33. Percentage-wise, what you have out here, folks, the Dow's down 1%. S&P's down 1.2. Nasdaq's down 1.7. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is at 225. You get the Nasdaq off 109. S&Ps are off 33. Percentage-wise, what you have out here, folks, is that you get the Dow down 1%. And, it's pretty wild because we're at large numbers, folks. 228 is only 1%. S&Ps are down 1.2%. NASDAQ down 1.7%. We're talking with our man, Mr. Andy Hecht. We are talking markets. We're talking commodities.
So we're back down pretty much at the level in the stocks where we were on Thursday, August 10th, right?
Oh, yeah. The
right.
Dow already took it out.
Right. So, this should not come as a surprise to anyone. These markets, it's not like they're dropping from low levels. You know what I mean?
Yes. Right.
So I think there is a lot of downside in these markets, and certainly the news cycle is feeding the bearishness. No question. We went from look at where we've been the last 2 weeks. We went from North Korea, right? Yeah. We went right into this Charlottesville thing. These are all issues domestically on a foreign basis that all weigh on the prices of stocks and weigh on the dollar, and it just seems like we're going from crisis to crisis from week to week.
Yeah. Well, the thing that is intriguing out here, depending on what news source you're looking at and talking about, even today, folks. Okay, the markets always speculate. Okay, what's driving it lower? And one of them, it had to be with Gary Cohen. Is he going to quit? Right? Mm-hmm. And what's so intriguing about that one to me is like he's stuck, and it's terrible because the aspect is President of Goldman, right, takes the job, maybe going to be the Fed chairman, right? Mm-hmm. Bottom line, you're Jewish, he's Jewish. You get the neo-Nazis. He can't say anything, and then
it's not a good situation.
Right,
for
and
him.
then
However,
if he leaves now, the bottom line, I'm sure he's going to do. He doesn't need anything, okay? But bottom line, he's not going to be the Fed, and Goldman, he'll come back, but he's not going to be the president.
But you don't think that Gary Cohn, after with his profile, could waltz into the CEO suite at a lot of major corporations?
Oh, I do, but that's still not Goldman. Yeah,
right.
No, I do.
So it's not like the man will not have the world of opportunities.
No, I understand that, but
him.
then why isn't he quitting?
Well, by the way, the day is still young and the week is not over.
Right. No, I'm with you there. I'm with you there.
Things are moving quickly,
Oh, no doubt. I just,
I mean, would you be surprised to see him walk out? I certainly would not.
No, I wouldn't. No. But I think every hour that he doesn't, then he's given up, quite a bit, man. So.
Well, he is. He absolutely is. I mean, it is very prestigious to be the head of the Fed, to sit in that chairperson seat. And he has a very, very good shot at it.
Oh, but I think he will be, yeah. Right.
But not only that, think of this, Tom. He is also a Democrat. So he would have a shot at sitting in that seat in the future, in any case. He's not he's a pretty young man.
Unless he goes south right now, I don't think anyone that basically doesn't stand up for rights is going to have a shot at anything.
Well, no. I'm saying if he walked out, it's not like he would be giving it up.
I agree.
He would still have a shot at it in the future.
That's right. That's right.
Right.
Yeah.
I mean, if you opine about the future, if Pence becomes president, he would still have a shot at that.
Oh, for sure.
He would still have a shot of it,
for sure.
Even if a moderate Democrat was elected.
Yeah, my point was he's trapped, man. Do you know what I mean?
Well, he is trapped. He's trapped within his own conscience here. Let's see which way it drives him.
Right.
This is a watershed moment in the career of Gary Cohn.
Yeah, pretty intense, right? Man. Yeah, it is.
So for my carnivorous friend Tom O'Brien today, I think the meats took a look at the calendar and said, oops, grilling season's almost over, and they fell today hard.
Okay, so cattle. Oh, yeah, look at this.
Yeah,
okay.
they've been coming back.
Yeah.
And, they turned around today, and they said, I looked at the calendar, and I realized people are going to stop barbecuing in a couple of weeks. So we better kind of give up that. And it was across the board. It happened in the cattle dropped, the hogs dropped, and, so we're kind of seeing that. Remember, last October, these prices dropped to the lowest level in years and years. We had pork down at 40 cents. We had cattle below $1 a pound, and the days of strong demand are very limited, maybe limited to a couple of weeks here.
Yeah. Hey, let me ask you something. So
Sure.
the wheat market and the bean market, right? I mean,
Well,
when I
so
look
then
at it, the beans look to me like they came right back where they should have and they took off again, but the wheat just can't handle price.
Wheat cannot handle price. Wheat has had a problem, but I think that all of these are so deeply oversold here that there are some opportunities. But I wouldn't look for too much. We are going to have the 5th straight year of bumper crops, and that will weigh on price. But I do think that just like the buying was exacerbated on the upside in late June and early July, we're getting the exact same kind of law of physics move on the downside now in corn and wheat and soybeans, and that we will get a snap back up at some point in the next couple of sessions. But if you're buying here on a scale down basis, I would sell during that snap back up because, the fundamentals are that supplies are going to be pretty big this year.
Yeah. But do you see what I mean about how the soybeans, we took off from the 921 mark on the 30th of June.
Yeah.
Yesterday, or the day before, you hit 922. Yesterday, we hit 921, and, that's all she wrote.
Right, that's all she wrote. Well, support there is at 907.
Yeah.
On the new crop. That's the June 23rd lows. As long as we hold that, I think that this is a good area for buying in soybeans, no question. The other thing that I'm seeing in the soybeans, Tom, is that the crush spread is staying up at around 96 in December, which means soy meal products, the soy meal, the soy oil, they are keeping pace, and that is because the weak dollar supports exports to China of those soybean products, and the oil seed should find support here.
Interesting. Yeah.
Now, as far as wheat is concerned, wheat is a very global crop.
Yeah.
And bottom line, lots of wheat around. We thought that there was a big scare. A lot of people got long. They all got barbecued on the downside. Now, whereas, this thing could go to $4. But I think around here, scale down, I think eventually you'll see a higher price.
These commodities are a trip, man. I mean, wheat just went from $5.92 a bushel to $4.40.
Right. And the Minneapolis wheat went from $7.80 and change to $8.70 and change to $6 and change.
Really?
So these are massive moves in these commodity markets.
Yeah.
But hey, they're nothing compared to Bitcoin, right?
Oh. And then,
I always said commodity is the most volatile asset class. Not anymore. Digital currencies.
Oh, there's no doubt about that, man. I mean, and folks, when you're talking about, hey, let me show you this. Let's see, Bitcoin Trust. Where do you see this? This is sick, folks. You do not want to buy this thing.
I would never touch that, by the way.
Yeah, this is at a premium. So picture this. The symbol is GBTC. It trades at $729. It's supposed to trade at net asset value. Folks are buying this. Like today was 93,000 shares. This is trading 89% over net asset value, folks. 89%.
Don't play that. Wait until they come up with an ETF.
Or just
that's
buy
directly
Bitcoin
on
if that's
Bitcoin.
what you want to do,
then
right?
You could play it.
Unreal. Okay, listen, we look forward to the show at 5 o'clock. Thanks, Andy.
Thanks, buddy.
Appreciate it. Stay right there, folks. I'm coming right back. And, of course, Andy's going to be coming up with you at 5 o'clock. Dow right now is down 217. NASDAQ's off 100. S&Ps are off 32. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. We're going to take a look at the small caps. What you're going to see out here, folks, you get the IWM down $2. You're breaking the swing point from last week. The swing point from last Thursday was 135.77. You're at 135.42. That's saying this baby wants to get down. Probably the next stop is 134, which is the swing low of the 18th of May. And then you have the 132, which is the swing point of March 22nd. We take a look at the SPY. What you have with the SPY, that baby's coming right into the lows that were established. I think I just broke them, actually. Yeah, I did. So 243.70 was the low of last Thursday. We're 243.45 right now. That gets you bottom line. Next stop, you get the lowest swing point from June 29th. That's 248. You get the lowest swing point from May 18th, which is 235. NDX 100, same type of setup in the NDX. NDX right out here. Big expansion of volume in the NDX, too. 57 million. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Beautiful day to be a bear.
Yeah, there's no doubt about that. But it's been a one-day wonder, so we'll see where this shakes out.
Yeah, I know. I'm looking at Sandstorm Gold, ticker symbol SAND.
Let's take a look at it. So you get Sandstorm Gold. The low for the year is 318. The high is 664. This is, they try to be a royalty company. They do it a little bit differently. They purchase gold, purchase agreements.
Agreements?
Yeah.
Like Franco-Nevada?
No. This is not a Franco-Nevada. This is not a Royal Gold. Yeah, it's not. Different ballgame.
Do you have any earnings?
Let's take a look here. So, let's see. Let's first see what they take in. They take in 67 million, and I believe they lose money. Let me just see this. They say they're going to make a penny.
Mm-hmm.
So that's a small company, man. I mean,
it's a very small company.
Yeah.
How many shares? What's the float on it?
3.6 million, that's a small float, which is good. Market cap is 800 million, but guess what? You get an 800 million market cap and you're only grossing 16 million. That doesn't make any sense.
No.
No. I'd go somewhere else. Gold's on a run, so go somewhere else, man.
Thank you.
Cooking, brother. Have a great one, man. Have a safe one. Let's go take a look at some of the higher volume stocks, and we will have volume in this marketplace out here today, too, folks. You have Bank of America down 50 cents. Cisco, they came out with numbers last night. They're down $1.37. They haven't grown. L Brands is off 160. That's Victoria's Secrets. You have Apple down 280. Let's see. Microsoft's down $1. Inside the Dow Industrials, let's see if we got anyone that's actually positive inside the Dow Industrials here. Okay, so nope, there's not one positive inside the Dow right now. We got the largest downdraft, Goldman. Goldman's putting 27 negative points in. Apple's putting 19. Home Depot's putting 17, and they are all red. That's the first time that they went to Sherwin-Williams. They picked up the red paint, and we haven't seen that in a long period of time. The NDX 100. We take a look at the NDX 100 as to what the strength is versus what the weakness is. Let's see what we have. Oh, this is pretty intense, too. So inside the NDX 100, this is intense. There's only 2 stocks that are in the green at all. And, wow, man, that you don't see that too often. And that is going to be Tractor Supply is putting 2 points in. Mylan is putting 1/100th of 1 point. Let's go to Steve in Nashville. Hey, Steve, what's going on, brother?
Duncan Steve.
I know. I like it, man. How you been?
I'm not too bad. Actually, lately I've been Panera Pete.
Oh, Panera Pete. I like it. I like it. Hey, is Panera delivering where you are now?
Oh, sure. They always deliver it.
Okay. Yeah, they just started it down here, man. Yeah, that's...
there you go.
Right.
No, you're looking good, man. Hey, I had a quick one on GE in general, since it kind of runs the show in the market, right?
Yeah. Well, I mean, GE's been a dog forever, so...
Yeah, what I meant is it's way back.
I'm sorry, what?
It's like IBM.
Yeah, it's still got a brand, right? There's no doubt, right?
Yeah. What do you see? Anything up or down in this thing?
Yeah, I see like $11.
11. Is that where you're pointing right now?
Yeah, it's the high of the high volume low of 2008. There's nothing here, man.
I have the high volume low. Okay.
It's pretty intense, man, when you look at it. I mean, GE's GE, and I understand that, but when you put this on a chart, man, it's like, okay, GE topped out 2000, $60. 2007, $42. 2016, $33. This thing's just laying out here. 17 could save it.
All-time low. I'm sorry.
$5.72. But 17. What I just did is this, Steve. I actually put it on a quarterly too, and you're going to see at $17.24. That's probably the first place that it should get some support.
Yeah. Okay. Gotcha.
And things. Bottom line. It
is what it is.
It is what it is, man. It's pretty crazy, but what's so intriguing about GE is that they really of course started as a light bulb company, but they really turned into a bank, and they lost a fortune. If somehow they could actually masked quite a bit of it. That's what they actually did.
Right. Right. Yep. Gotcha.
Okay, man.
Hey, good to talk to you.
You too, man. Have a great one. Have a safe one.
Bye.
So to break down GE right now, folks, this is pretty cool. So the revenue is $126 million. Power and water is $26 million of that. Aviation is $26 million. Healthcare is $18 million. Energy is $15 million, and other is $37 million. You can see what's going on there. They basically don't know who they are. That's how that kind of shakes out, because they're a little of everything, and GE's GE, and they're going to be around. There's no doubt about that. But you get a new CEO. Probably one of the smartest things that he did do is that, and they're moving right into South Boston. But guess what? They are putting off the amount of bread that they're going to put into those buildings, and that's really smart. Because guess what? You better start putting some money to the bottom line before you start making some nice brand new digs. If I've learned anything in life, you don't need brand new good-looking digs to make money, folks. You need people that want to work. You need ideas, and you got to be out there pushing those ideas. That's what it comes down to. And you got to have a value. If you don't have a value to whoever your client is, and they're getting something, you're not going to be there. That's the bottom line. We get over and we take a look at the here. So Walmart came out with numbers today. Walmart right now, 15 million shares. It's not that bad actually. It's down to $1.40. You put this on a monthly chart, it's really just a blip. Yeah, Walmart's not done yet. Walmart probably, well, we know it's going to be one of the survivors, but this is not a bad-looking chart for the type of day that we actually have out here. You stay right there, folks. We'll be coming right back. Dow Industrials are down 258. NASDAQ's off 117. S&Ps are down 36. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 260. The Nasdaq's off 115. S&Ps are off 36. Percentage-wise, what you have out here is that you have 1.1 in the Dow, you have 1.2 in the Nasdaq, you got 1.8 in the composite. And if we go over and we take a look at that composite, what you're going to see, this thing, so the low of Thursday is 62.14. You're at 62.30. This thing's going to get some sleep, folks, and basically, I suspect get up and jump this creek here, and don't be surprised if we're not running down to this 6,081 tomorrow. So it's pretty intense. There's no two ways about that. Now, you do have a Friday in the summer, but guess what? That being said, you get enough expansion of volume right here that this selling. And, the difference here is that the selling picked up tremendously in the number of days. Most of the last time, we had the selling on May 17th. Then you go up for another 2 weeks. You had the selling on June 9th. Then it's consolidating for almost a month and a half. You have the selling on the 27th of July. Then you go try to go up for 2 weeks. Then you have the selling last Thursday, and it only could last 3 days. And now it's back in here. And that's a big number, because what we do have now is this. We are going to finish inside the NDX 100, the Qs, with heavier volume than we had last Thursday. So that sets up as at least a test of that area. So pretty big number. As you come over to TFNN, folks, what you're going to see is that if you happen to want to be in the metals market, I'm going to be doing the 800th edition of my gold report next Monday. We have a special that's going on. Normally, the gold report is $85 a month. You can get 60 months for $600. That's $10 a week or $40 a month, folks. This special is good until the 27th of August. That'd be the 800th edition comes out next week. That's 15 and a half years. Fast 15 and a half years. Yesterday's gone, tomorrow's not here. What are you doing right now? Just remember that, folks, because that saying will keep you straight and will keep you focused on what's important and what you really want in life. You stay right there, folks. We'll be coming right back. Dow down 265, NASDAQ down $1.80, S&P's off 37. We'll be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Become a servant of love. Love is what makes you happy. And if you become a servant of love and your partner becomes a servant of love, the day will come when you can be with your partner with no guilt, no blame, no anger, and no sadness. Market-wise, let's take a look at it out here. We had the Dow Industrials down 274, NASDAQ off 123, S&P's down 37. Monster moves, folks. Bottom line, percentage-wise, what you got is this. You had the Dow down 1.2%. NASDAQ down 1.9, S&P's down 1.5. Gold contract, what do we have with the gold contract? Gold contract was up $11.20, trading at $12.94. Now, gold has been an ABC structure on the way up. You get $13.27 as your price projection. The intriguing thing here, folks, is going to be how we trade tomorrow. Why? Fridays can be heaven or hell inside the metals market. Now, I expect tomorrow it's going to be heaven. The reason being is this. You have a ABC structure on the way up that's confirmed. And what that means specifically is that you took a B point out, did it with volume, all of the above, wide price spread, 1327. That being said, you backed down last couple of days. But what we did again here today is that you had a huge expansion of volume as we were going against the highs of last week. So your probability gets much higher that that baby wants to go topside tomorrow. Silver. Silver up 9 cents, trading at $17.03. Silver looks like it wants to trade at 18 bucks. And, you know, silver's volatile beyond belief. The platinum market was down down $4 at $9.75 an ounce. Copper down 5 pennies, $2.90 a pound. Light sweet crude up 24 cents, $47.02 a barrel. Notes. 10-year note up 9 ticks, 126.25. 30-year bond up 24 ticks, 153.26. They both want higher price. We'll get our head wrapped around that. King dollar. King dollar down 137 ticks at 95.575. The euro is at 117 to US dollar. The yen is at 109.5. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Well, we evidently have a bad tick here, folks, because I have a chart up, and this is saying that the SPY went down to $232.32, and it did not do that. Let me go over to the future and see where we are in the futures. Now, that just happened. The scary part about that, depending on how long you've been in the marketplace, folks, is that it seems that when you do get those bad ticks like that, that's exactly where the market ends up going. So let's go. We go over to the future market. What you're going to see is this. Now, the futures had rejected higher price the last 2 days. Rejection of price and volume. What do we do today? Bottom line, you barrel downtown. You barrel downtown with an expansion of volume. We've done 2.1 million contracts in the future market. You're going into 2.3 million. We are closed under the lows of Thursday. This baby, your next stop is down here at 24.02. Right now, you're at 24.30. You're in the lower range. That's the bottom line. We go take a look at the NDX 100. Same type of setup inside the NDX 100. NDX 100 comes down, the 3Qs come down with 67 million shares. That's after going higher yesterday with 31 million. You're going after the swing low with 63 million. So the way that the Qs are also trading is it's saying that that is also going to go to lower price tomorrow. So this could get really wild watching this whole thing shake out. What the Qs also did once again is they got inside the lower range, that lower range being 135.80. IWM, which is the weakest one, bottom line, IWM, you know, let's just bring this back for a bit, and you're going to see kind of where we are. And the IWM, you are back to where we were trading in December of 2016. And, you know, I suspect the IWM looks like it's 132, and you're at 134.93 right now. Gold contract, we take a look at gold. What you have with gold is that you had the price spread come in once again. You had 315,000 contracts. Bottom line, you know, and you're going to need a huge amount of contracts because what we do have in gold is this. So let's bring this back so you can see what we're going into. We're not only going into the downdraft that was from November, the election, we also had a downdraft in October. So October, the high of October was $1,316. We had come down to $1,249 and was fast too, furious. We went all the way back up. We got back up to $1,309. On the night of the election, what you had is that gold, you talk about volatility. We end up going to $1,338 and then closing the baby out on that week at $1,218. We end up with a low out here of $1,123, and then what you've had, it's been trying to get into that level. It's halfway into it right now. We've needed big volume. You got up there the first time on the 21st. You get to $1,294, 21st of April, that is. Tried again, $1,295 on the 9th of June. Went down again. Tried again last week at $1,291. And now it's intriguing about this one, and that's why I suspect we're going to break it this time, is that we pull this a little bit closer, and what you're going to see now is that we got up and we were up there, on the 11th, last Thursday, and we had good volume. We have bigger volume right now coming into this. So you could have multiple ABC structures going up into that consolidation. And if that's what we get, I suspect you're not only going to get the 1327 out of this, this baby is going to go up. And what you're going to see inside this, I put this continuous contract up here, that you're going to actually get the run to 1377. 1327 is your A to B equals C to D. That's a 1-to-1 ABC. What gold loves to do, whether it's going up or down, folks, it loves to expand the Fibonacci numbers. That's how gold likes to trade. If we go over and we take a look at the bond market, which is just as important, bottom line, interest rates are going lower. And what you have out here is that we're at 126.26. You did 1.3 million contracts. 126.10 is the low of the high of the 14th of June. So that's game to get to that high. You break that high, and that's where it's going to get really interesting, because let's go to the 30-year and take a look at the 30-year, and I'll put the 30-year on a continuous contract. So the 30-year also had price out here today. It closed almost at the high of last week. We closed 155.26. That baby's going after 157.28, and that also can be there in the next couple days. So high volatility out here. Bottom line, market wants lower price, bonds want higher price, gold wants higher price. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at the steel market out here. So, U.S. Steel, and this is where, you know, it's pretty wild watching technically, fundamentally, the whole deal, how this infrastructure market actually traded out. So, March of, well, here, let me do this. I'm going to do this on a longer perspective so you can kind of see how this whole thing shakes out, because it's pretty wild. So U.S. Steel, you know, 2006 had a high of 196 bucks, okay? Goes down into $16 in 2009. Been consolidating since then, okay? Come off a low of February of 2016, that was $6. Nice pop up, you know, dead cat bounce, however, okay? Nice pop up. Now, election, just as gold got killed, steel goes to the moon. Steel goes from a price point of $17, U.S. Steel, $17 to $33 in a month. Doesn't stop out there. This is the month of November. Then we go into February. It tops out at $41. Now I'm going to bring this closer for you so you can see how this shakes out, because you can bring the dollar, you can bring the peso, you can bring all of these up here and see how this whole thing shakes out. It's pretty amazing. So we top out at 41 bucks. You come with no volume, by the way. We come down fast, furious, all of the above, okay? Bottom line, the market had figured out that, guess what? The market figured out, the steel market figured out that we weren't going to get an infrastructure play in April. It's August 16th right now. They figured, the market figured it out April 28th. U.S. Steel goes from 32 bucks to $21, okay? Now, the reason I'm bringing this up just right now, guess what? We just got another deal out here. Bottom line is that there's not also going to be, there was 2 councils that got canned the last couple days. Well, guess what? Now there's not going to be an infrastructure council either. Bottom line, whether it's AK Steel, whether it's U.S. Steel, you know, guess what, folks? There's nothing that's going to be happening here. And the cool thing is, though, is that the market figured it out. You know, you had AK Steel, that had a high of $11. That got smoked. AK Steel figured it out in January. They went from 10 to 7. Now you're trading at 526. So big numbers all over the place here. We go take a look at the dollar. We haven't done the dollar yet. Okay, so the dollar I don't think is done with the dead cat bounce yet, and I'll show you why. So yesterday, folks, what we did is this. It was the prior day, I think. Yeah, it was the prior. Yeah, no, it was each day. We've done this a few times here already. So the dollar came off. The dollar has been going down since January 3rd. November 7th to January 3rd, it took off like a rocket ship, okay? Comes down since January 3rd. August 4th, you do a nice bounce. Well, a nice bounce, you know, it finally caught a bid. You went from 92 to 93,640. You had some good volume, 31,000 contracts. We go sideways with 20,000. You come back down with 28,000. Now, when we came back down with 28,000, August 11th, that was still going into 31, so that's still saying that a dead cat bounce is still alive. Now, watch what happened in the last 3 days. We go up on Tuesday to 994, but we can't hold price. It has 23,000 contracts. Yesterday, you get to a higher high. We do 35,000 contracts. We get to 94.05. Today, we do 93,995. Still can't hold price, but yet, watch what you have here. You did an expansion of 40,000 contracts. That baby still wants to do a dead cat bounce. Now, that being said, this is what it looks like what's happening here. We put this on a continuous contract, and what you're going to see lining up is a very large A to B of an ABC structure, more than likely on the way down. And this will be pretty intense, because if we bounce up to the 95, your A point on this is 103.80. So it's almost 104. Your B point is 92. So let's just, oh, good, 92,390. I'm going to, yeah, so it's 10 bucks. It's a $10 A to B. If we bounce to 95, that gives you an 85. where 88 is the highs of 2008 as well as 2010. And that's the way it looks like we're doing this. If we break the 2008, 2010, we'll be down at 72. And that'll be pretty intense. But volatility is out here. And if that's what we have, we go back to the gold contract for a second, and we take a look at the gold contract, because the correlation is going to be direct here. And we take a look at the gold contract, and we have this on a continuous contract. What you're going to see is that the 1377 that I was talking about a little bit earlier, so you get an ABC structure up, confirmed at 1327. 1377 is the swing high that we've been consolidating since May of 2013. That's a long time to consolidate, folks. If, in fact, we broke over that, we would be at 1,600 in a heartbeat. And I suspect if that's going to be the case, it looks to me that the 1,600 would be when the dollar, if in fact it goes to 88, okay? We break 88, then what you're dealing with a monster ABC structure on the way up, and it's a beauty. Watch how this shakes out, because this is pretty intense. If we take a look at just the whole move, and there's no reason this can't happen, and the move I'm talking about is from the beginning of the bull market in gold, okay? So watch this, because this has been, you talk about, and what I'm bringing up here is that I've been doing the gold report for 15 and a half years. That's crazy, okay? Bottom line, the first run took gold, okay, we get in at 282.50. So if I just bring it down to the bottom of 2001, you bring it to the high, we did a 50% retracement, which is a normal retracement in a market that can go much higher. What you would have there, I'm just going to ballpark this, but let me just do two. So watch this. This is really cool how you shake this out. And this would be like, this would take a while to fulfill, but you always want to be cognizant of what can happen. So if I'm going to take 1920, I'm using the continuous contract, so this is not going to be, right to the penny, but you don't need it right to the penny. So $1,640 is the A to B, plus 1,046. You're talking 2686, and that wouldn't be a stretch. The reason that wouldn't be a stretch is that the high in the continuous contract right now is 1920. So stay tuned for some volatility, and this is the time of the year, of course, that it's volatile. There's no doubt that what we have set up inside these markets right now is that you're going to have volatility. We know that all these news events can come out of anywhere, and they will. That's the other side of it. The real question is, I see the economy is still strong, and I don't expect it to fall apart. I'm trying to figure out why the dollar's falling apart, but someone's selling that dollar, and they're selling that dollar in a big way. You stay right there, folks. We'll be coming right back. Dow Industrials down 274, NASDAQ off $123, S&P's off 38. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We're going to take a look at some of the higher volume stocks out here. What you have is this, folks. You had Cisco down $1.30. Advanced Micro is down 29 cents. Apple was down $3. L Brands, that's Victoria's Secrets, Bed Bath & Beyond, that was down $1.40. Nothing really big heavy. Walmart $1.08, Facebook $3. Let's go with Facebook first and take a look at Facebook. $3 is not the end of the world. You did come in with, it's going in there with some volume. We did 16.9 million versus last Thursday of 20 million. Let's go over to the king of shopping out here, Amazon. Amazon down $17. Amazon, we're at $9.60. This is going after this high volume swing low of the 9th of June, which is $9.27. Google, we take a look at Google. Google was down 15. That looks like it's going to go fill the gap. So Google is dangerous because it has this huge gap that's open from one of their earnings when it gapped higher on the 27th of April. That's 875. So that's a big number. Let's go into the biotechs. We take a look at the IBB. IBB now $5 today. Now the IBB looks like it's going to go after the swing low from last Thursday. Now, if you break that swing low from last Thursday with volume, you get a monster ABC down, and that's what's going to happen with a lot of these equities, by the way, folks. And this is a very large A to B. Like in the aspect of the IBB, 329 is A and 304 is B, so you get $25. The C is 312, so you're talking about a 185, a 285 level, which makes sense, by the way, because this took off at 290 topside on the 16th. Let's go and take a look at the oil and gas sector, the XLE. This is saying, folks, that oil's going lower. So the XLE has been leading the actual physical oil market down, and by like weeks. So XLE today goes down 89 cents. You break, oh, look at this. It's going to be an AB. Okay, so we got to take a look at this. So this is an ABC down on a weekly basis. Right now, 76 million. Okay, we'll see if we get 20 million shares tomorrow, folks. We did 14.7 today. You get a confirmed ABC down, and this is how it lays out. Your A point is 78.50. Your B's 63.25. So it's a big one. 78, $18. That gives you $50. And guess what's laying out We're going to. So the XLE is a high volume, a low, at $49.93, and the A to B equals C to D is a $50 price tag. That baby is going south. Let's go look at ExxonMobil. Yeah, this got taken apart. So in the last 5 days, Exxon's gone from 79 to 76. Monster volume. You put it on a weekly, it's broken. On a weekly, it's going to 66. Right now, you're at 76. Chevron. This had an expansion of volume today. You're at 105, just came off 112. Yeah, these are all in trouble. Okay, so we know the oil and gas sector's in trouble. Let's go to the financial sector. The XLF. XLF, guess what? Wide price spread, expansion of volume, broke a swing point with volume. Yeah. 76 million shares traded today. XLF's on its way down to the lower end of this consolidation, which is 22. You're at 24. Let's take a look at Goldman. Goldman has been the canary in the coal mine, folks. And this goes way back, by the way. Goldman, we're 221. If you take a look at Goldman, what you're going to see is that Goldman topped out March at 255.15. And what that had done is this. That had tested the high of 250, and that was this 2007 high. So watch this, folks. At 227, no, it had volume of 227,000 on a monthly basis. It was $215. It took 7 years, no longer than that. It took 10 years to come back up to that level. It gets up to that level. It gets over the level by $5. It closes under the level for the month by $20. It has 90 million shares versus the swing point it was testing with 227 million. That is a classic time in the trade test with dramatically lighter volume. What does that set up? That sets up two different things. First off, you get a failure. So then what you look for is that, okay, where's the last time we had any volume that can stop it on the way down? And that what that price is, that is from April of 2010, which would be $186. So, you know, bottom line, I expect that's exactly where we're going to go. Now, the largest weighting structure inside the XLF and the financials is Berkshire Hathaway. Berkshire, we're going to put this up because I believe that we're just going to get Berkshire to fail at its highs. So the high that we're looking at is March of this year. $177.86. We did 25 million shares. We got over it 2 weeks ago with 14 million. It failed last week, and now here's the test, because this week we got to 178.97. You get over it again, and the volume's going to be anemic. So the volume's going to be somewhere about 15 million versus 25. If you get Berkshire to close under the 177.86, you're also going to get a failure on price, on volume, and that's saying that your largest weighting structure also is going south. Bank of America, that went south with volume picking up. Wells Fargo's the dog, that's for sure. Wells Fargo, that's way off its high. You're 51 bucks right now on Wells Fargo. That's down from 59 in March. Citigroup, that's at 66. Let's go into Visa and MasterCard, because Visa and MasterCards are still monsters, folks. They still are making money hand over fist, and I expect they're going to too. Yeah, they're at highs, you know, and not that they're actually here. Let me look at this for a second, because I don't believe that they have a large weighting structure inside the XLF. So inside the XLF, let's see what we got. Yeah, they don't. In fact, it doesn't even look like they're in here. Yeah, the top weighting structure still is Berkshire Hathaway's 11%, JP Morgan's 10. Let's go to JP Morgan for a second. Yeah, JP Morgan can't make it either. So JP Morgan failed at the 93 the dollar mark. You failed on price and volume. Now, bottom line, you can't bust them topside. It's going to try to bust them low. You're at 90, 81 is going to be game here. So this is going to be an intriguing Friday coming into the end of this week. And, of course, what you do have, I heard something pretty cool out here today. So we're going to have that total eclipse on the 21st. And what's going to be cool, folks, is that these big solar companies, they're going to be doing all sorts of tests because, of course, in the middle of the day, you're not going to have a huge amount of power in so many places. So it's pretty cool that they're going to take advantage of that in order to test out those grids. You stay right there, folks. We'll be coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And this next story, I don't think any of us want to hear this one, but bottom line, so Delta Airlines, airports, JFK. So this is pretty intense. In the last 24 hours, folks, at the JFK airport, Delta jets have hit 2 planes. Now, no one's hurt, but I've watched this come across the tape. I thought I'm seeing things. So check this out. This is like, if you've ever been to JFK or LaGuardia, I mean, it's a mind blower. There's no doubt, man. I mean, the amount of planes coming in and out, but looks like someone was doing something wrong here all day, the last 48 hours. Delta Airline planes were involved in 3 wingtip collisions and separate low-speed accidents over the last 48 hours at the JFK airport, leaving 1 man injured. The NTSB, National Transportation Safety Board, are investigating the accidents. Low-speed collisions between planes and other aircraft and vehicles on tarmacs or taxiways occur relatively regularly and don't often cause significant damage. That's what they're saying. The first accident was on the 15th, August 15th, 7:12 at night. A Boeing 737 operated by Delta hit an American Airlines Boeing 757 as they were both taxiing out for departure. No one was injured. The next one was yesterday at 4:30 in the afternoon. JFK crew was directing a Delta into the terminal when the left wing hit another Delta plane that was parked at the gate. An hour later, the left wing of a Delta M88 hit a truck that was leaving the ramp area. Bottom line, man, it's pretty. That's bizarre. That is bizarre. So let's go take a look at a couple numbers out here. And we're at the end of earnings season, but we do have some more numbers coming out. You have the Gap. Okay, so the Gap, this closed at $22.68. That is trading right now at $23.90. Let's see what they have to say, if they can get saved. Okay, so the Gap reported the estimate was 52 cents. They made 58. They see earnings per share for the year, $2.12 to $2.60. Their net sales, the estimate was 3.7. They come in with 3.8, so that's good. Their comparable sales were up 1%. Banana Republic is down 5%. They got to get rid of that store. Inventory was plus 5% in the stores. Yeah, let's see what the stock's looking like. That's if they can, bottom line, stop the bleed, and that's impressive. That's, the stock has already got killed, but that is impressive in this day and age that they can just hold their own. This is the stock down from 46 bucks. You're trading at 68 right now. AMAT. Let's go take a look at AMAT. AMAT closed at the price point of 43. That's trading 44.90. And this one here, which is going to be cool to see what this is all about. The way that AMAT's been on fire, folks, okay? This is an equity that, was at $14 in 2015. You're at 43 right now. Now, what AMAT does is this. AMAT has a... let me go through the numbers first and see what they have to say. Okay, so Applied Materials, the estimate was 84 cents. They made 86. The revenue, the estimate was $3.69 billion. They made $3.7 billion. They see, that was this quarter. They see next quarter, the range was from 74 cents to 95. They see 86 to 94 now, which is good. Their net sales, they had seen 3.4 billion to 3.9. They see 3.8 to 4. Now, what that says, which is pretty cool, is this. So picture, AMAT, folks, makes its money by building all the chip plants. Now, in order to build the chip plant, what ends up happening, they put the machines that are inside them. So in order, what that happens is that they have to have the orders. And when you're looking at AMAT, what you're always looking at, if you're a fundamentalist, you're looking at what is their backlog. Because their backlog specifically tells you whether the chip business is continually going up or it's pulling back. And what you want to be looking at in there is that you want to see an accelerated backlog. Let's see what they had. Okay, AMAT's benefited from a record surge in demand for equipment needed to produce the semiconductors. Revenue in the fourth quarter, which ends in October, is going to be 3.8 to 4 billion. Let me see if I can find there. Applied customers are struggling to keep up with demand for chips used for storage data, everything from smartphones to supercomputers. Memory chip, let's see. Yeah, it doesn't have the backlog yet. They will have the backlog come in. They will, if you go through those numbers, you'll see what that backlog is. And the backlog, no doubt, folks, is a huge deal. Let's go over to Ross Stores and take a look at Ross Stores. Ross Stores closed at $53.33. This is trading up $5. That they caught a bid, and so this is a discounter that has got killed. This discounter, you know, has gone in the last 5 months from 69 to 53, but now you get a pop, you get a 10% pop, which is a huge pop. No two ways about that. What you have is this. So here's the numbers. Okay, so the estimate was 77 cents. They made 82. Their sales, the estimate was 3.37 billion. They did 3.43. It's a good number. Next quarter coming out, they had a range of 63 cents to 72. They brought that end down, but the market still likes it. 64 to 67 right now. The gross numbers are the gross for the year, earnings per share. The range had been 307 to 327. Now they're seeing 307 to 317. So not a bad setup, you know, Ross also. So what we have seen is that it's the large discounters that can get saved. Now, as you come over to our website at TFNN, folks, you have about, let's see, we got about 10 more days that we're going to be doing this special. Next week, next Monday, is my 800th edition of the Gold Report. We get $85 a month for the Gold Report, folks. It comes out once every week. It comes out Monday morning before the market opens. Bottom line, if you want to understand the gold market, gold, silver, the U.S. dollar, the yen, the ETF structures, meaning XAU, HUI, everything's in there. The buy, the sell. You have until next week. What I'm doing, we're doing 60 weeks at $600. So it's a savings of over 50%. If you're a subscriber right now, you can take advantage of it. If you're a new subscriber, you can take advantage of it. Check it out on the front page of TFNN. As I said, you got basically until the 800th edition comes out next Monday. And if we fast forward 15 and a half years, this is where this gets really weird, man. I mean, you're talking about what, 2032? That doesn't even make any sense, man. But guess what? Yesterday's gone. Tomorrow's not here. What are you doing right now? And as I said at the beginning of the show, if you keep that in mind, folks, you will have a blast. Because guess what? Where there's one way we're going here. And you remember that? You remember what's important in life all the time, or as much as you can. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And, as we're out here, folks, this S&P, this baby is getting trashed. Okay, so the futures bottom line, we are down now $42. You're at 24.25. So this is going to be pretty intense coming into the morning session. What ends up happening, of course, is that the futures close, they reopen back up. When they reopen back up, they're coming in for a beating. And when we take a look at this, what you're going to see, there's no reason that these things can't be at 2,400 on the open tomorrow. That's the type of setup that this actually is. It wanted to jump the creek anyway at the 24.30, and they just opened right back up and didn't even blink. And because we're at such higher highs, it's much easier to do. Let's put it that way, particularly on a Friday. NQs, thank you. I'll look at the NQs, Peter. So the NQs, they're down. Oh my God, yeah. So they're down 133. That is pretty intense too. So that they also just went south. Yeah, they took down 17 to another 27. And the VIX was saying it all out here today too. Insurance got very expensive very quickly, folks. The VIX was up by 381, $15.55. Yesterday you were at 11.25. And what that means, when you get an expansion like that fast, the VIX has to do with everything about how much the market will pay for insurance for the downside, folks. That's what's going on. And the folks that did buy that, they are going to be very happy, it looks like, inside their portfolio. That's what it comes down to. And when I started the show, I was explaining that the time between selling, and this has been the fastest time last week to this week. In fact, this is the second worst day of the whole year in the S&P. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up, growling and prowling with you. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking tomorrow morning, 9 o'clock.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Heck's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.